Welcome to Tradiers, the Trader's Edge, coming to you live 3 o'clock every Wednesday, 3 o'clock Chicago time, 4 o'clock Eastern. Bobby, we kept the people waiting for 5 minutes, but we're like when you go to a concert and it says that the band is coming out at 8, the band comes out at like 8:35 because they're artists and they can't be rushed. You and I are the same way, right?
Yeah, Axl Rose kept me waiting for 2.5 hours one time. And because it was a Guns N' Roses concert in Chicago, they actually posted pictures of the crowd, which included a lot of women raising their tops up. And then next thing you know, they stopped doing that and they started putting it on the men. So they started raising their tops up, which is not as much fun.
You raised your top up, didn't you? You raised your top. You did. Yeah, I know you did. Before we start with the show, because we have a lot to talk about, and this is a question for the crowd as well, too. Favorite concert that you've ever been to? I will mention a quick 3. The original Farm Aid, 1985, Champaign, Illinois. I'll say Simon and Garfunkel at Comiskey Park. And then Little Feat played in my little town of Palatine to a crowd of about 30,000 people in the middle of downtown. What's the best concert you've ever been to?
First one I was ever at, 1979, Kiss.
Oh, wow. Did you paint your face?
What's that?
Did you paint your face?
I went to 4 Kiss concerts, painted for 3 of them, but it was not the first one. It was the next 4.
You just
actually went to 5 because my third favorite concert is the Kiss concert in 2021, which I think was their 4th and not final farewell tour.
Really?
That was at the United Center in Chicago.
Nice.
And then I got Bruno Mars. Was sick.
Oh, he's good. He's very talented, I think. Yeah.
That's like a tie. I also saw Prince at the Rosemont Horizon, and he came out and played Little Red Corvette acoustically with just a spotlight on him on a stool. That was the single best song I ever saw performed.
That's awesome. And moments at a concert, like when they hit some. Yeah. I saw James Taylor and Jackson Brown at Wrigley Field, and for the final encore, do Dr. My Eyes together.
Great song.
It was just so cool. I hear that markets are fluctuating a bit, and some of these people might have tuned in to talk about markets. And I think there's some really, really fascinating shit to talk about. Okay, Monday we had the biggest rally of the year. S&P rallied 1.76% on some more benign Trump tariff talk. And now April 2nd, remember, people, is Liberation Day, according to Donald Trump, which I'm not sure what the hell that means, but he says it's going to be when he announces all the tariffs. I personally think he tends to talk big and then back it off. So I think in the immediate effect might be some buoyancy to the stock market, but I certainly don't think this corrective phase is over. To you? And do you want to talk to a chart?
No, I don't. And I've been talking about it for a while. Interestingly enough, I got reached out. CNN reached out to me today, which was weird.
They did to me too. What they want to talk about? Copper?
Copper.
Yeah, me too.
Yeah, that was weird. I mean, I answered, but you could tell the answer they wanted. Right. So I gave
was that it was Trump's fault?
Yeah. So I gave him 2 reasons why I did this on purpose, just so you guys all watching can see this as well. If they quote me and they only quote the tariffs as being the reason for gold or for copper being higher, I'll read my response to you. I don't know if you responded.
I did. I gave 5 bullet points and none of them were tariffs.
Well, I responded with, where is it? I basically said this. Here, I'll read it to you. The rally is driven by 2 things, and they are not listed in order of importance. That was me giving them the optionality to look like jerks in my eyes. Glencore shut down its copper Alto Norte smelter. Did you smile when I said that?
I did smile. Whenever you say smelt, I smile.
Invoking force majeure, this particular smelter produces 349,000 metric tons of copper anodes annually. Copper anodes are intermediate products crucial for the final stage of refining pure copper. A shortage of these anodes can trigger a cascading effect through the copper supply chain, impacting the production of high-grade copper and potentially leading to market imbalances and price volatility. That was number 1. Number 2, potential tariffs on industrial metals from President Trump and his administration are causing demand pull forward and price hedging, which we know is happening, right? Mm-hmm. That may likely unwind if the tariffs do not materialize. This is evident in the widening spread between COMEX copper futures at the CME Group and COMEX futures at the London Metals Exchange. That's what I sent it. And I sent it like that on purpose to see if they only put the Trump tariffs in the article, if I even quoted at all. And I did list that I'm a co-host of this show and the Futures Edge podcast. as well as being chief market strategist at Bad Trading Partners. See which one of those they use. I don't think they were going to quote a podcast host.
No, but
So
it's funny.
experiment.
Yeah, when I saw the message come from CME today, which they must have got our names, from the same people or whatever. I was like, CNN, you guys don't talk to people like me. You hate people like me. Like when CBS called me a couple of years ago to be part of their local broadcast here, and some really nice producers. And I said, let me stop you right there. I will do your show. I love CBS, whatever. CBS hates me though. So somebody above you is going to say, Jim Iuorio, that scumbag, we can't have him on the show. So you might as well look up the chain right now and boot me off, because they don't like what they feel are my political leanings, which by the way, are not any political leanings. I care about policies. They're going to hate that, by the way. But I thought it was interesting.
Yeah. So we are going to get some announcements of auto tariffs while this show is going. So I'll keep an eye on my Bloomberg over here to see if I get those. But those are supposed to come out. They're actually supposed to have been out already. Cool. So auto tariffs, I think, are an interesting thing, and they apply to metals as well. Do you have any opinion on them? I mean, do you think they're going to be super targeted, or like some people on the left say, this is a distraction from Signalgate?
It could be. I think it is folly.
Warfans Gate. What are they calling it right now?
I don't know. Come on. Let's talk about Signalgate for just a half a second before I move to your question. It's absurd. There's been intelligence leaks every administration forever. There always is. Okay. By the way, intelligence leaks doesn't always mean it's the right leak. If you or I were in charge, we'd be leaking fake shit all the time. That's what people do. So and I'm not saying they are sophisticated enough to have done that, but it's worth considering. That's what they should have said probably. Anyway, back to the automotive thing. Now, anyone who I think says they have a pretty good idea of what Trump's tariffs are going to be and what the fallout is going to be, I think they're wrong. I think that this is the chaos theory at its best. There's a million things that could happen in this. The most likely, in my opinion, is that Trump walks back the tough talk and makes them easier, and the market becomes more pleased with it, which is a process of us ending this corrective phase. A process that's not over yet, in my opinion, but it is an element of it. And that's what I think. Trump is not an idiot. He might not want to be measured as much by stock market performance as this time as last time, but he doesn't discount it 100% either. Does that make any sense? It's a non-answer, I know.
No, it makes a lot of sense to me. Here's the thing. I mean, I think, we've talked about this before, so let's talk about it again real quick. Trump mentioned the stock market. I'm going to go with, since it's longer than the last time we talked about it, 80 times at this point. That number's made up, but it's probably pretty close to accurate. In his last administration, right?
Yeah.
When he was number 45. Now he's number 47. I don't think he's tweeted one time about the stock market. You would think, even with his personality, that right now he'd be saying, don't worry, we're going to recover. The stock market's we're going to make the stock market great again. All he keeps saying is this is a transition phase. There's going to be some struggles. And, when prices go down in certain things like eggs, he tweets about that. When they go up, he ignores them.
Right.
And I think that's political. I think that's correct. I also think he's not an idiot, contrary to what the other side thinks. He's not an idiot. You're an idiot if you think he's an idiot. Yeah. In the same way that if you think the left was nefarious over the previous administration, and they might call you an idiot for thinking they weren't, right? These are just the typical machinations of politics. Trump is just more open, and that's why he looks more criminal to people who hate him, because he's just more open. This stuff that we're run by an oligarchy of billionaires now. Welcome to the last 20 to 30 years.
Oh, more than that, Rockefeller.
100 years.
Yeah, 100 years, right. Yeah, rich people own government in this country. They always have. Thinking they don't is absolute insanity. And the notion of the gold card for $5 million, you can buy your citizenship. There's always been programs similar to that in place, not just in this country, but all over the world. Yeah. And Trump calling them a gold card is almost that he wants the opposite side to think he's transactionalizing things, to think he's, being Donald Trump. But it's always been in place. Of course, if you got $5 million that you want to deploy, we want you as a citizen. What do you think? We only want migrants who have not two pennies to rub together? That's asinine. If you think that Trump is being an idiot, I just don't get it.
Okay, I want to share a chart with you if I could.
Good.
Our boy Luis will put it up, hopefully, as soon as he sees it. And I think it's important for today. It's the Round Hill Magnificent Seven Magnificent Magnificent Seven ETF.
Mm-hmm.
And we're seeing basically the erasure of 2 days of rallies in the Nasdaq, and we're now in that sort of gap up. Now, again, this is an ETF, so you get gaps here, right? And I want to point something out very specific, okay? And this is actually something I'm talking about for a client tomorrow. We have what Mike Arnold and I here would call a sloppy double bottom. There's a bottom here. Can you see where I'm pointing, or do I need to zoom in?
No, I see it.
All right, so there's a bottom here and a bottom here, and there's a peak here. And the theoretical target of that particular move would have been right about at this 175 extension level, which is right about here, which we fell just short of on the 25th yesterday, right? And then we pulled back. So in theory, this, you could almost call this complete. What's also right here is a 200-day simple moving average. And you could see the typical, you and I talk all the time about the test of something and then some continuation. You look for continuation. I look for a retest of that level and then a continuation. Here's the close above the 200. Here's a complete failure against that 200, right? And when I look at it from this perspective, the Mag 7, the NASDAQ cannot go up without at least 4 or 5 of the Mag 7 rallying, right? Because it's a market cap weighted index, and those are the 7 largest stocks. Tesla got hammered today, over 7% lower. I think it might still be over 7% lower. NVIDIA, over 6%. I can go down the list for you if I open the sidebar here. What else do I have in here of the Mag 7?
Google.
So Tesla is down about 5.4% right now. Let's put Google in here right now because I should be watching these. I just tend to watch this ETF as opposed to the individual stocks. Google right now down 3.27%. Apple right now is down about 1%. Microsoft is down about, not doing this fast enough, 1.3%. What am I missing? Meta?
Amazon and Meta.
Meta is down about 2.4%, and Amazon is down about, well, it's only about 2.25% now. It was worse than that earlier. So when you look at these, there is no way for the overall market to rally, right? Nor is there any way for the NASDAQ to rally and lead it out, which earlier this morning, when 3 of the 4 US indices were higher, the NASDAQ was the strongest. It pulls everything else down. But the interesting part I have to ask you about, gold's lower. What do you think the dynamic there is?
I don't. I just think gold is it's a little stretch. It's been just rallying to beat the band. I think that any sort of small movement like this is just catching a breath. I think that I have the line in the sand of where I want to buy it again, and it's got to take out the green candle from yesterday on the upside because it's kind of like a best fit. What do you call it? A bull pennant, right? And if we take out that the green wick, if we take out the green wick, I think we're off to the races again. So I'm not putting much weight on the small pullback in gold. Should I?
No, I mean, one of the things I actually struggle with here. So you see, I have a trend line there, right?
Yeah.
If I can get a positive day close above that trend line, I can get long again.
Okay, and you're going to get that then, right?
Well, no, it's a negative day close above.
I got what you're saying. Yeah.
Yeah. Now, in theory, this is very hard to see. So I'm zooming in as close as possible. I drew this trend line from the high here to the open here. So here, in order to see if it closed above, and again, I'm zooming in as much as I can, it's difficult to see. Let me see if I can zoom in a little bit more. The wick connects to the body of the candle below the trend line.
Yeah.
I don't know if that's big enough for you to see it.
I can see it.
That means it didn't close. I need a green candle close above. A red candle doesn't qualify. And if I get that, I can go long again. And you can see I've got some what I call GAN retracement extension targets. And my main target is actually 30.95 for gold. So that's my next target to the upside.
And do you like my thesis of buying it above that green candle, or do you see no reason for that?
No, it coincides with what I'm saying.
That's what I thought too.
If we broke above it and then closed back down red above this trend line, I wouldn't be long.
Right. I'd probably get out of it then. But I
Yeah.
think
Well,
during the
that's
day, I
better,
might look for
right?
that. Yes,
Because
exactly.
I'm always looking for closes to trigger longs.
Okay. And now remember, guys, the fundamental talk about gold still, we can, when the election happened on November 5th, we were very vocal. Bobby and I have been accused of being gold bugs for about the last 2.5 years. I guess we are. Fine. Accuse us whatever you want. The election happened. I thought one candidate was fabulous for gold. That candidate didn't win. The other candidate was just pretty good for gold. And gold suffered a little bit at the beginning and then started to fly. I think the biggest part of the story remains central bank buying. For the last 3 years, central banks have bought over 1,000 metric tons of gold, the most they've bought in 75 years. This is being led by China, India, and Russia. It is directly related to what happened in 2001 when Russia invaded Ukraine and we froze them out of the SWIFT payment systems and then froze all their dollar-denominated assets. If you are going to be the world's arbiter of trade and the owner of the reserve currency, you have some responsibilities, and that's to be somewhat unbiased in trade. You can do this if you want, but then you can't expect everyone to be stockpiling your currency as much as they had in the past. Now, gold's whole percentage of global central bank reserves has only gone from 60% to 57% in the last 3 years. Not a lot, but not insignificant either. Bobby, anything to comment on that? Do you think that's the main driver of gold or just weak dollar policies?
I never do this because this is a tradier show who, by the way, has the best single options platform out there that you guys should know about. I'm going to stop sharing for a second. But Luke Groman on our other show, the Futures Edge podcast, had just an absolutely startling entire vision of what could happen with the flow of funds globally if tariffs actually became more permanent, right? I think that was fascinating. And to me, the more I thought about that, the more that placed gold somewhere in the 9 to 10,000 per ounce range.
Yeah. And it's
But I'm
basically
not predicting that. I don't want you guys to buy it based on that.
But his thesis was that if they stop buying as many U.S. Treasuries because of tariffs, they'll have to put their reserves somewhere else. It's gold. That was the long and short of it, and I love it. I think it's right. Yeah.
Yeah.
So, what you want to look at the S&P real quick because I did.
Yeah, I'm sorry. I took the charts down and I shouldn't have done that, Luis. That's my fault. I'll look at the S&P. I didn't mean, I actually closed the whole platform. Pull that back up.
I was describing to someone the other day about like the 5 to 10 minutes that happen before a bunch of 60-year-olds, almost 60-year-olds do a podcast. It's like a bunch of guys with glasses on their nose going, I'm supposed to hit what button? What then? And then a younger guy going, Jesus Christ, people.
All right, just so you guys know, I'm putting up the SPY, but Jimmy and I look more at the S&P futures. But I'm going to put up the SPY for the sake of conversation because they are pretty well matched. And normally, like I won't put up the QQQs if we're looking at the NASDAQ because they're not as matched as like the SPY is to the.
Okay, so here's what I think. Okay. So to me, great, nice retracement. It's not even, it's probably only got to 50% of the down move, not even 50%. It's still comfortably below that green candle from about a quarter of the chart away. You see the green candle I'm talking about, that other previous low?
This one?
No, up higher than that, about a quarter. No.
Oh, here.
Yeah, right there. So what's that level is what, about 59.50?
That low, well, again, I'm looking at the SPY, so that's 575. So let's call it 57.50.
57.50. Okay, so below that, I don't see any reason to be long this yet. My thesis was to be shorted, and you remember why I sold it. We looked like we were about to have a breakout to the upside. We took out the highs, and then we failed miserably 2 days later. And I was like, oh shit. Bought a bunch of puts. Then I structured it into a put condo that I love right now. And I am not ready to believe that 2025 is going to be this wonderful year. I think transitions are hard, inelegant, clumsy, whatever you want to call it. And I think this is not going to be an exception to that. So I think down 12, 13%. Bobby thought down 15 to 30%. And in the NASDAQ, he's already at least partially right. So I did not sell when it started to head south today. Mostly because I was busy doing other shit, which pisses me off because I should have sold it. Thoughts?
Yeah. So here's an interesting thing about this. Let's go back in time. All right. So when this was happening, you were talking about it needed to break here, which I think was fair. But if you can see my cursor, you can see the difference here at this particular point in time. I'll just kind of like loosely measure it to the 200 was almost a full percent, right?
Yeah.
So we need to get up through the 200 and then up through that resistance level. And that's a very natural resistance level. I would argue it's probably a significant resistance level, right?
Yeah.
Now let's get rid of this. And as we move back to the present, you guys didn't know I had a charting time machine here. They're basically the exact same level. There's only a slight difference between the two. And the 200 is likely to turn lower. So that's what happens in these down swings, which is why I tell people all the time, like, look, when we got this cross here, okay, you guys know that the red here is the 50 and the green is the 200. If this continues to fall down, we're going to get what's called death cross. Now, when we got this here, I told people it was likely that we were going to rally back up to this intersection between what I use here, which is the 8 EMA and the 21 EMA, which we call a rotation zone, and the 200. We're going to likely rally back up to that intersection. Jimmy, you heard me say that. And then I would probably look for a sell-off from there. Okay. It's not something I trade because, again, what I'll do myself is I'll put a trend line. This will be a best fit trend line, and I'll draw it right about here. Okay. And that, you could draw it wherever it's a best fit trend line. So if you think it's more significant that it's here, go ahead. You're still going to have to get through this for it to make any sense, this particular low on the 21st. But when you're looking at it here like this to me is now an extension off of a failure as opposed to just a failure. And the reason that I've done that over the years is I have stretched out. When I left the trading floor, I was a massive failure as an upstairs trader, like horrendous, like losing every day, every trade, every week, every month, to the point where I had to stop, right? And I said, okay, what is going to fix this for me? Smaller positions for longer periods of time, right? In other words, I don't want to just, it's the contrast. You still exist on the floor a lot, so you still get that sort of stimulus and talking to other traders. I talk to you and I talk to Mike Arnold, and that's basically it. Sometimes I talk to Tracy Shukart, which I actually enjoy a lot. From that perspective, I need things to be wider and smaller rather than more frequent and larger. And that to me is a way to succeed. And that, by the way, a lot of people do that with options rather than doing it the way I do it.
Yep.
That's the way I do smaller positions and stretch them out. That's what you're doing with options. You're taking larger positions, but they're still stretched out, right?
Yeah. This is going to come as a shock to no one. I trade every day. I don't really expect to make that much money as a day trader, and I don't. I trade every day to keep myself plugged in. Where I make money is my 2 to 3 week time horizon option trades, like the silver trade I put on a couple of days ago. I love the trade. It's already up probably about 10% from where I put it on, and I want it to last for about 3 weeks. But so that's exactly true.
Sidebar here. I just started laughing because our friend Widge, who watches a lot of our shows, just posted, and Rudy Havenstein and Dave Cullum are also doing a live stream right now. He goes, you guys should really coordinate these things.
We should definitely coordinate these things. Rudy and Dave are our buddies, but this show, by the way, can be repackaged. We'll sell out if we've lost some of our audience to them, which, by the way, I tip my hat to them. We've lost a little bit of our audience to them. So
yeah.
What other asset you want to hit? Which, by the way, there's one thing I wanted to say about the Mag 7 again. Earlier in the year, people were like, well, the Mag 7 is stretched. Fine, it's true. Well, the Mag 7 could, correct. Well, then we'll just not be long them. That's not the way it works. When so much of the heavy lifting of the rally has been done over the last couple of years by a few names, when they start to correct, they drag everything down with it. It's not as simple as buy something that's not stretched. That doesn't work. It's not. It's just, okay, good.
By the way, I just checked. We're beating them by about 50 people right now. But
okay, good. This matters.
Yeah. So it's always a competition, even when you like each other.
Oh, no doubt about it. I love those guys.
So let's talk about this. From a fundamental perspective, I want to talk about why I think this isn't over yet. Okay. All right. And it's going to go to politics, but only as it applies to markets and policy, right? When the Fed raises rates because of inflation, okay, jump on me anytime that I'm saying something you don't agree with. They're trying to slow the economy and get people fired, right? They just don't say that, right? They just don't say that. So now all of a sudden, Trump is campaigning and he says, I'm going to lower prices. I'm going to lower gas prices. I'm going to lower energy prices. I'm going to lower food prices. And really the only way to do that when too much money is chasing too few goods is to get people fired and slow the economy. I maintain that the right people to get fired were federal workers who didn't have to go into the office and couldn't respond to an email with a simple question on it. I think that's the right people to be fired.
Oh, not only do I agree, I think that was a big election issue too. I think that most of the electorate agreed with you too. We were to put that in perspective. In Trump's first term, 9% of the jobs that were created in the entire term were government jobs. In Joe Biden's term, 31% of the jobs that were created were government jobs. It was an unsustainable path. It was bureaucracy, bloat. Do I feel for the individuals? Of course, Bobby and I, we like individuals. We like the people. It's not about that at all. We think it was a bad policy to have so many goddamn government jobs. I tweeted at Elon Musk today, and a lot of people picked up on it, but not him, fortunately, is that he started talking about deregulation because he was talking about, he's talking about like how it took 400 days to build the Empire State Building, and the bridge in Baltimore has been destroyed for a year and there's been zero work done on it because of regulatory hurdles to fly through. We have to start working on those regulatory hurdles now if the private sector is going to absorb those 300 to 400,000 government jobs that we're losing within the next year, which I hope we lose, but I do want those people to land jobs somewhere else. But this is a difficult needle to thread, in my opinion.
Yeah, so I think you hit it right on the head. And this is the thing. People, you look at jobless claims, for example, they haven't spiked yet. We've talked about this before when we thought the labor market was loosening a little bit. The jobless claims hadn't gone up, probably 6-8 months back. And part of the reason that you and I theorized that was happening is because most of the layoffs were coming in tech, and tech people get severances. You're getting the same thing with government workers right now. When you look at the last jobs report, I'm talking about non-farm payrolls now, the majority of the shrinkage in the number came from government employees. And they're also getting severances that this administration has given them. So let's again stress that we're not talking about left versus right here. Okay. The only way to slow inflation is to slow consumption, because as Milton Friedman said, at the end of the day, it's always and everywhere a monetary phenomenon. I might have butchered that. So
no, you got it right. I don't agree with you and Milton Friedman 100%.
Okay,
I think one of the way to handle it.
We can talk about that.
You go.
I want to put up this Tesla chart, which some people don't mind destroying a company that has 100,000 American workers, which is Tesla, and they have even more workers globally. So again, I talked about the double bottom pattern that Mike and I teach. Same thing here. There was a double bottom pattern. I had this pre-drawn on here. I was not able to get in this particular trade because the close that triggers it was this candle right here, right? And this is the target. So basically the close at 278 with a target of 280 and a stop at 233 doesn't work for me mathematically. So I wasn't able to get it, but you again had the completion of this particular pattern, close above the 200. So for me, I would like to see a test and then a rally. Instead, we got to drop back below it. Tesla is dropping with the rest of the market, not with the vandalism to the vehicles or the Molotov cocktails. By the way, you might know, was it Tony Greer or Jared Dillian that tweeted out, Tim Waltz mentioned Tesla dropping, it's time to buy it? It was one of those guys.
I don't remember. I thought it was Tony.
It was one of those two guys. And that's when it was sitting at 225. So we now know, because here's 225, we now know that Tim Walz is the indicator. If Tim Walz talks about a stock, where's 225? Right around here. Yeah. So if Tim Walz talks about a stock, it might be a very good scalp in the opposite direction of Tim Walz. But when you look at a situation like this, the reason I think the overall sell-off is not over is because they are having short-term success in doing the things that will slow inflation, which will slow the economy and get people fired. Hopefully it continues to be government workers, and then we could sort of revive other economies here. That's my thought process on why.
And I want to get back to this too, but a quick time out special offer for you guys who have been such good fans of the show, and we appreciate that so much. Tradier is offering 3 months free of Tradier Pro. We do not pitch things we don't believe in. This comes some of the highest end options people we've had on this show who, again, in the podcast world, we ask them to come on a show. They barely even know who's sponsoring the show. And then they're like, wait, Tradier Pro, I use that. Can't live without it. It's good for the novice option trader all the way to the expert novice, all the way to the expert trader. Please click on the banner, sign up for the 3 months. There's no obligation. It is 100% free. Cancel it on time if you hate it, but give it a go. Thank you guys very much.
So let me get rid of this chart. And I have not been watching the chat as much as I normally do because we have we don't have a guest thanks to my fuck up.
Yep.
I scheduled 2 people for April 2nd and nobody for today. So now we had to pick. So let's go rapid fire if we can with everybody that made a comment. First was Tony Nash. Tony said tariffs make great TV, and he's right. I mean, Tony did some really good work. If you don't follow Tony Nash on X, he did some great work showing why tariffs did not cause general inflation in the last Trump administration. And then he shows a lot of data on why it may not again this time. By the way,
tell him about what he said about China too. That was an important takeaway when we had our conversation with him. I will if you don't want to. So
yeah, tell me because I don't remember what you're talking
about. What generally happens in particularly a economy like China is they will wait a couple months. If exports start to falter because of tariffs, they will subsidize. They have done it in the past. And guess what happens then? If they're subsidizing their exporters to make up for the tariff, then Donald Trump was at least to a certain degree right about other countries paying for the tariffs, which, by the way, you can make fun of them all you want. It is a complicated issue. Sometimes they do pay for some of it. Sometimes they don't. Anyone who thinks they know it all is just an idiot. But Tony did some great work on that. Thank you for that, Tony.
Yeah, and his complete intelligence product is affordable and fantastic. So you guys should check that out.
Question.
No money coming to us if you sign up for it. Rich Kunkel said still buying gold or sitting on your existing stash.
100% sitting on my existing stash.
Yeah.
I may
put up the Rich quote, please. I don't know if you can. There it is.
Yeah. So Rich, I still am long up to my eyeballs in gold. I've seen nothing to dissuade me from that position yet. As I said to Bobby before, if it takes out the green candle from yesterday on the daily chart on the upside, I think it's a spot to buy more. Keep this in mind. I probably won't be buying more. Like I said, I'm up to my eyeballs in gold and I'm greedy, but pigs can get slaughtered. So I am long it, comfortably long it, and I'm not getting out. Bob?
And then he said, nice blue shirt, Bobby. This is white.
It seems white, Rich. It seems white.
So Rich is colorblind. So we found that out about Rich. I am sitting on the existing stash and looking for an opportunity to trade more. The existing stash that I have is plenty of my overall net worth. So
as you guys know, that we're not fibbing. We've been talking about for 2.5 years. I'm long up to my eyeballs copper. I'm long up to my eyeballs silver. I'm long up to my eyeballs gold. This has been my trade to hedge against idiotic dollar policies. Guess what? It's working so far.
All right. I got to share a chart in order to answer Tim's question. So if you want to put Tim's question up, and if you could leave it up, Luis, because this is going to be, there's three, so LT, okay, so he's just asking about the one chart. All right, so this is the TLT chart, which is the iShares Treasury, it's 20+ year Treasury bond ETF. I will tell you right off the bat, Jimmy, is that today is going to be a trigger of this double top pattern, okay? So when we talked to Steph Pomboy, I told you guys I thought you were wrong about yields going higher, and I thought they would go a lot lower first. This is predicting a move all the way down to, let's call it 87.23 on the TLT ETF. Now, I don't know what this ETF would trigger in terms of yield, but I'm going to guess that it would be somewhere in the, for the 10, let's call it the 10-year note, probably above 450. Which right now we're looking at a 435 10-year.
Okay, good. So I never understood the real hard pullback in yields. I guess was maybe because if our economy was going into recession, according to the Atlanta Fed GDP now, people were selling stocks. Maybe they were going to rotate into treasuries, or maybe someone's going to think they were and front run them. That's the only reason I could think of. Because other than that, there is a metric shit ton of bonds that need to be sold by the United States to service their debt. The Japanese, if we start tariffing them, they might not be really happy about holding their bonds. They might be selling some of those. There's a lot of supply coming to market, in my opinion.
All right. So Widge has got two things. One, he says, we've got you. And I suspect that means he's watching us.
Appreciate that, Widge.
Instead of watching Dave Cullivan. And I'll be honest with you, when this is over, I'm going to turn on Rudy. I haven't seen Dave Cullivan. But since Dave is on there talking with Rudy, that will still be going probably by 7 o'clock.
Dave doesn't shut up.
Dave does not shut up. And then the last thing from Widge, a couple of things on that. And I'm pretty sure, or as soon as I read this, we're going to know what Widge is referring to in his second comment here, Luis. Couple of things on that, not just government employees, but the massive flood of immigrants that only help push food and housing inflation higher while supporting wages. Interesting.
Suppressing. Yeah.
Just really recently, Mike Singleton from Invictus Research, by the way, another really good affordable product that if you choose to subscribe to Invictus Research, Jim and I will make $0.00 off of. Okay. He did a whole little mini study that he talked about to his subscribers, of which Jim and I are, about immigrants actually contributing quite a bit to retail sales and to consumer consumption. So again, Widge is right. He's dead right. That will slow consumption and theoretically, at least, slow inflation, although Jimmy doesn't agree with us on that. Well, with me and Milton Friedman, fucking Friedman, you don't agree with.
Right. I've disagreed with Jim Bianco and Luke Roman. I'm usually wrong when I disagree with those people. I can't disagree with Milton too. I'm just climbing the ladder.
Yeah.
By the way, there's something I wanted to mention that, again, you guys, we're nothing but transparent all the time. I personally thought that trying to deport all the illegal immigrants, 15 million of them, whatever the hell they said, I think that's bad policy. Again, we all don't have to agree on everything. Okay.
Yeah.
It's boring if we do. And so many people give me, telling me how stupid I am, which I have no problem with that. I've been married for almost 35 years. People tell me I'm stupid every day. So the
people,
well,
or one person,
right? Yeah. But I think a much better idea would have just been toughening up crime enforcement in urban areas and making it cutting off all services, not all, but most all services, weaning them off that and making them get jobs and then leaving them here. I thought it was a bad idea. What do you think?
Well, the U.S. Birth rate has been below replacement rate. Widge probably knows this exact statistic, but I'd say for at least 15 years.
Yeah.
So there's no way to get consistent GDP above 2% or productivity gains without more workers, right, unless AI replaces 3 people for every 5 that are employed.
Right.
And I think we're a ways away from that. Like I said, Widge probably knows more about that than we do.
Yeah.
So let's talk about inflation. Okay. You disagree with me and Milton Friedman. I think I'm the one who told Milton Friedman.
I think you did. I remember that. I remember that meeting.
I was 6 months old when it happened.
Right. Yeah.
So Nathan Dolan, I'm interrupting. He just threw a comment on it.
I like Nathan.
Dolan is great. He's going to be on our other show, and he's an immigration attorney. He's Beware Confirmation Bias on Twitter, and he posted some stuff about immigrants. And him and I had a friendly little banter, and I immediately invited him to be on the show. Actually, I don't know if he's going to be on this show or the other show. I don't remember. He should come on this show too, because labor is a big part of what we talk about in trading. Luis, that's the last Beware Confirmation Bias right there. He does not look like that and doesn't have green hair. Actually, he does kind of look like that, but he doesn't have green hair. So anyway, back to the inflation thing. Tell me why you disagree with Milton Friedman and, more importantly, me, that inflation is always a monetary phenomenon.
Okay, so the monetary component of it was enormous from mid 2020 on. Okay, so we increased M2 money supply by a crap ton. The thing that really kickstarted it was supply disruptions around the globe, which started the whole ball rolling. Because for inflation to fly, you need to believe that inflation is going to fly. It has to be, inflation expectations have to become embedded. That's what it is. So now, so right now, M2 money supply is increasing, but the supply chain is intact throughout the globe, and barring any ridiculous shocks like we saw in 2020, I think inflation will be contained, because I think a government administration, particularly like the United States, could usher in supply side solutions, as Stephen Moore talks about. Get rid of regulation and allow companies to produce more, have them benefit them to produce more. And right now we're just in just a ridiculous and oppressive regulatory environment. If we can loosen that a little bit, the companies will produce more, expand more. There'll be more stuff. If there's more stuff, it can swallow up some of the increase in M2. I'm sure if Milton Friedman was here, he'd say that that's part of what his thesis is because, and then explain it.
You just basically Milton's your therapist, even though he's dead.
He's dead, right?
You talk yourself into the answer, which is what a therapist does. I'll tell you a story about when I was in college.
Yeah.
The philosophy class. Little professor. She was a nun, and she was a professor of this philosophy class. And she said to the whole class, there are statements that are always true. I would argue inflation is always and everywhere a monetary phenomenon, or is always true. But the statement she proposed is, I said, there's no way there's statements that are always true. She said, it's either raining or it's not raining. I said, what about when it's snowing? She goes, then it's not raining.
No, we've seen snow, rain, Yeah.
It's either raining or it's not, whether it's snowing or not, was her point, right?
Yeah.
If it's snowing, it's not raining. If it's snowing with rain, then it is raining. It's either raining or it's not raining, no matter what, right?
Yeah.
When you talk about supply chain causing inflation, Milton Friedman says that inflation is always caused by too much money chasing too few goods.
And that's
what happens when the supply chain constrains.
Too few goods. I get it. Yeah.
Too few goods. Okay. So he really just kind of walked into what he would say. I actually saw somebody say almost exactly what you said to him on one of his speeches before he passed away. It was still in black and white. And he just kept coming back to the same thing, to where, like, he said to the kid at one point, he's like, you just keep walking into it.
He's a funny guy.
No way around it.
Before we finish up the show, let's talk about the summit. Luis, you want to put the banner up?
Yeah.
There. Join us for the Trader Summit. Register for free on that link. What do you do? Is it a QR code, or I'm just learning what this kind of high-tech shit is? Either you hit a button or you do a QR code. Please join us. It will be fun. It is the future of trading, the Tradier Option Summit. It will be great. Please join us. It is what's the 4th month? That's April 9th, 2025. Please be there. Moving right along. Do you want to talk about
one more from Tim? That's directly to you, so I'm going to shut up.
Okay.
By the way, Tim has a very, very kind wife who I'm sure yells at him too. But the question from Tim is, M2 for February was up 6.4%. That figure was about 2% a year ago. Inflationary, Jimmy?
Tim, I have that chart. I have M2 money supply up every day. And I've noticed the massive growth. And that is one of the reasons I am not too bearish on assets. Is it inflationary? I think, hell yes, it's inflationary. And that's one of the reasons I think inflation sticks between 2.8 and 3.2% for the next 2 years, which, by the way, I'm not convinced that Jerome Powell doesn't want it to stick between 2.8 and 3.2 for the next 2 years. It solves some of the problems that he perceives to be present. But do I think that it can jump to 5% again? I think that it needs to involve a supply shock. And I think as long as we have an administration that it has the back of corporate America and wants people to produce more, like in the oil patch, I think they want to be drill, baby, drill. They're not yet. And there's got to be a price that attracts the drill, baby, drill concept. But conceptually, they want to make it easier for people to produce. So I do think it's inflationary. And I do think inflation hovers around that 3% level for way too long. And I think it's going to piss people off.
Do you think that this particular administration, while we agree it's manufacturing friendly and business friendly, they're also nationalists, which, by the way, I don't look at that as a bad word like other people do. I don't think that means Nazi.
When all of a sudden, when they brought up white nationalists back in 2016, I'm like, what does that even mean? I'm white and I'm a nationalist. I'm not a Nazi. I guess I'm a white nationalist. Like, they said it like it was a thing. Nobody ever heard that expression before 2016. So I don't even know. By the way,
Alexei Navalny, who was the guy that Putin murdered, the dissident that Putin murdered, called himself a nationalist.
Yeah.
And he was just anti-communist, as anti-communist as can be. Anyway, I digress. So if he wants to convert manufacturing back from being farmed out to made in the USA, right? Does that by default mean wages are higher And even without a supply shock, you could get wages are already running at almost 4% wage increases.
Yeah, I think
Which
that
is unsustainable for like it's not getting us to 2% inflation.
No, but I think the bringing manufacturing back is one of the silliest concepts. I want to bring manufacturing back, but it does not bring scores and scores of manufacturing jobs. Most manufacturing jobs in developed countries like ours are automated. Tesla has plants where almost no humans work. There's human supervisors. Is it better to bring manufacturing back to our country? Well, yeah, it's better. Will it be a huge boon for jobs? No, that's just not the way it works. There's construction jobs, there's high tech, there's programming, there are jobs, but it is not. I mean, you're not going to have small towns all building car parts for Ford and then sending them out there and meeting at the bar at 5 o'clock. Those days are gone and they are never coming back. So is it inflationary to bring things back a little bit, but not from a wage standpoint, in my opinion?
That's a shame. I think you're right, but I also think it's a shame. Okay, I said Tim was the last question, but we're as big of fans of Widge as we are of Tim. So let's put Widges up and then you can call it. Should we get a correction in housing and stagnation in energy? Can we still have a ramping inflation? What would that source of inflation be? I already think I said what it is. I think it's already there. Wage growth is more consistent with 4.5% inflation, because wage growth without a productivity jump, which we haven't had yet, I can put the productivity chart up. We've been below the sort of 2.2% average for the US over the last 15 years since the pre-pandemic levels. But if wages, I don't see any way that wages come down. So you have to actually have a really bad economy for a period of time to get wages down. Jimmy?
I think that the housing correction that's probably coming is underway, I think takes the sting out of the wage growth and is a counterbalance to the inflationary argument. And I think it's what we've seen in the housing market is nothing short of fascinating. And I hope it's taught in business schools for the next 100 years. The rapidity of the raising of mortgage rates, which just made everybody with an attractive mortgage hold on to that home like grim death. And finally, they have to pry their fingers off it. And that's unfortunately with things like death, divorce, losses of jobs. That's why people will eventually have to sell their house. But this couldn't go on forever, that people who wanted to move couldn't move because they were locked in at a 2.8% mortgage rate. So I do believe there's going to be a correction in housing. I do believe that's going to be disinflationary. And I do believe it's going to counterbalance the wage growth that we are seeing, but that then still equals 2.8 to 3.2 for the next 2 years. That's why I'm long the commodity complex. Whew, that was a lot. I need a nap now. Are we done, you think?
Yeah, I think we're done.
Thank you guys for joining us as always. You guys are the best. The two shows we do are so much fun, and it's fun because of the audience participation, and it's fun because of the support you've given us. When we started these projects a couple of years ago, we didn't know how the hell they were going to go. And as it turns out, you guys like to be part of this community, and I think it's awesome. Thanks for the DMs. Thanks for the retweets. Bobby and I were in legacy media for 25 years. We found there was always some overzealous producer or a sponsor who was telling us what we could and couldn't say. That's bullshit. We might be wrong, but at least we're honest, and we get great guests. Thank you, guys. This has been The Trader's Edge from Tradier. I'm Jim Iuorio. That's Bob Iaccino.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.